If you are someone who is facing emotional trading, this video is for you. I'm going to explain how to reduce emotional trading with an example in this video. If you are new to the field of stock market day trading and or you are having issues with your emotional trading, you can watch this video. If you are a completely newbie also, you can watch this video because in this video, I'm going to discuss about an important strategy that is called gap up strategy, where we can see gap ups in the market very frequently. Let's go to the video, deep into the video and discuss about these three things in this video. What is gap up opening? How to trade gap up opening? Practical ways to reduce emotional trading with gap up strategy. I'm taking this gap up strategy to explain how to reduce emotional trading. By the end of this video, you're going to know about how to deal with your emotions during the live market. What are the practical ways you should include in your trading to reduce emotional trading in your trading career? Now let's get into the video and I want to know about you who are watching this video. What is gap up? I'm asking you that what is gap up? Just think a bit of time and say to yourself, this is gap up. So I know that you're going to have some knowledge about this because you're watching this video uh, when you are having some experience. So in my view, the practical view, what is gap up? When the opening price is higher than the highest price of the previous day. I know it may feels like very confusing for you, but I'm here to simplify the concepts for you. So, in my words, what is gap up? Let me explain this with an example for you. So, see here, this is the chart of 15th Feb 2024. So, see here, this is the 915 candle. If you see here, this is a naked chart which is not having any indicators. When you are new to stock market also, you can know what is gap up or not. So if you see here, this is the entire day's price action. Now, how to know whether the next day is a gap up or not? This is our question here. Now, see here. What you have to do is, if you will mark this day's low and day's high. For example, tomorrow you have to do your trading, right? You have to do the trading. So what you should do is you have to mark the previous days or the prior days low and high like this with a mark. Okay. When you do this, what is the next step? The next step here is when it is marking like this is the high of the previous day, this is the low of the previous day. So now when the price is opening somewhere here above this range, this is called gap up opening. Okay, this is the prior day's range. Now let's go back and see what I have told you. When the price opening is higher than the highest price of the previous day, higher than the highest price of previous day. The highest price of previous day is this. This is the high of previous day. When it is opening higher than this high, then we call it as gap up. So this is the opening. This is the first 5-minute candle and it is above the prior day's range. Then it is called gap up. Okay, now I would like to give you some examples for this uh, and just ask yourself whether it is a gap up or not. Okay, see, this is the range I have marked. This is the low of the prior days. Okay, you are doing this for today. This is the low of prior days or previous day range, and this is the high of the prior days range. Now ask yourself, when such things happen, we call it gap up. That meaning if it is a gap up, how do you conclude that this is the gap up? Now let's go here. It may feel like little bit confusing, but have faith in me and this channel, and I am going to explain you what is gap up very clearly. Now see here, this is the previous day's low and this is the previous day's high, and tell me if it is a gap up opening at this 9:15 candle or not. I'm going to give you 5 seconds time to analyze this. No matter if you are wrong or right or anything else, just ask yourself whether it is gap up or not. 1, 2, 3, 4 and 5. You have your answer right. Now let's see whether it is the gap up or not. Yes, it's a gap up. Why? Why? Because it is above. The first 5-minute candle's opening is here. See, if you know about the candlesticks, the red candle's opening is here. Right after opening, it is falling till here and it took some support here and it has closed here. That means this is the gap up opening. Why I am asking this in the sense, when you learn a concept or a strategy in the live market, you are going to get more number of doubts. So in this video, I would like to explain each and every problem you are going to face in the live market. For example, you may feel like whether this is a gap up opening or not. Okay, so the conclusion here is this is the gap up opening. Now tell me what is the lowest, this is the previous day's low and this is the previous day's high. Now I would like to ask you whether the next day is a gap up or not. Get ready to answer this question within few seconds. Now let's go here. Now tell me this is a gap or not. Tell me this is a gap or not. 1, 2, 3, 4 and 5. What is your answer? If your answer is this is the gap, you're wrong. This is not the gap. Why? Why? Because if the gap is happening above the prior day's high or above the prior day's low, then it is called as gap. I'm going to explain this with the charts, no worry. And I conclude that this is not the gap. Why? Because the first 5-minute candle is in between the prior days or the previous day's range. Now let's get deep into this concept. Now let's go to the chart. In this, I'm going to explain you how to know whether it is a gap up or not and how to trade it. Now, see here. If you know about me, I'm using the CPR pivot points to take the trades. I'm good at CPR trading and I do trade CPR strategies, whether it is gap up or gap down or a flat opening. According to the situation, I trade with CPR pivot points. So let's see. Let me uncheck this and I would like to tell you whether it is a gap up or not. Gap up or not. So see here, this is the 9:15 candle, right? So on this complete day, I am going to mark the low. Okay, the low is here. And again, what is the high on this day? This is the high. Okay, this is the high. Now see, this is the high and low. Is this the gap up? Yes, you're right. This is the gap up. So let's go here and see another example here. Now I am going to mark the lows of previous day and the highs of the previous day. And I would like to ask you whether this is the gap up opening or not. Yes, you're right. This is the gap up opening, right? Why? Because the price opened above the prior day's range and this is the gap up. I hope you guys understand about what is gapping up. Okay, now let's go here and see the next thing. Okay, how to trade gap up opening? This is the second one. Its rules. First, you have to confirm the gap up opening. How? We have to mark the previous day's range, right? The previous day's range like this, and you'll see the first 5-minute candle above this range or not, isn't it? So in this case, this is the gapping up. In this case also, this is the gapping up. Now the next rule here is this. Second, stay at the resistance R. Why I am saying this? By watching this video, you should know what is gapping up and what you should do during the gapping up. What is the strategy you have to implement when the index is gapping up? The answer here is stay at the resistance R1. By the way, let's see what is R1 here. The complete strategies or the trading tricks, everything depends upon CPR in my view. Now, see, if you are new to the concept of CPR pivot points, CPR is having, this is the CPR pivot point system. This is the CPR. Above the CPR, this is the resistance R1, R2, R3 and R4. Similarly, we are going to have the supports S1, S2, S3 and S4. Okay. Now, in this case, it is gapping up, right? I have already confirmed that the price has gapped up and what we should do to trade the gap up. We should stay at the R1. This is the second one. Let me show you. Second, stay at the resistance R1. So, in this case, where is the R1? This is the R1. Okay, this is the R1 and let's see what is the R1. I'm asking you guys in this chart what is the R1. Okay, this is the CPR. CPR above levels are going to be R1s and CPR below levels are going to call as supports. For example, this is the CPR and below this is the support S1, S2, S3 and S4. Likewise, this is the green line is the R1, R2, R3 and R4. Now, where we have to stay? We have to stay at the R1. Okay. The second thing is here. Now, let's see where it has opened. This is the R1, right? So, the price opened below the R1. Okay. Now, in this case, in Nifty, the price opens above the R1 and we should stay at the R1, right? So, we should stay at this point. Now, you can see here, when it is taking support at this point, from this pivot to next pivot, the price has moved with back-to-back green candles. This is the power of CPR pivot points. If you have learned this system and stay consistent, stay disciplined with this system, at some point of time you will understand how powerful it is. Now see here, at this point we stay at the R1 and there is back-to-back green candles to the next pivot. There are many minute factors to consider while taking the trade. But for now, you are in the learning stage of how to trade gap up strategy. And the second thing here is the first thing, whether it is gapping up or not. The second thing, you have to stay at the R1. Now, let's see what is the third one we have to do. The third here is let price come to R1 and see the price action at R1. Now, let's go to the charts. Where we have to stay? We have to stay at the R1 and see the price action at the R1. What is the price action here? This is the bullish price action. When it is gapping up, it is a good indication that the overall sentiment has changed. Conditions apply. That means you have to apply this knowledge along with the market sentiment. Okay, the strategy, the first one, that particular day's market sentiment is very important. If that market sentiment is bullish or it is neutral, there are higher chances to the price to bounce back from R1 to R2. If you are someone who doesn't know about CPR pivot points, you can watch my video, complete video on CPR, which is in my YouTube channel. I'm going to give the link in the description. Okay, so that you can watch it and you will understand the concept much better. Now let's see the next one. Compare the price action of Nifty and Bank Nifty. This is the fourth rule you have to follow. Compare the price action of Nifty and Bank Nifty. Why I am saying this? Because Nifty is the part of, Bank Nifty is part of Nifty. Meaning, if Nifty is having 50 stocks, in that 50 stocks, we are going to have bank stocks. That means banks like Axis Bank, ICICI Bank, SBI Bank, Bandhan Bank, Kotak Mahindra Bank, something like that. All the banks in Nifty 50 is going to happen as the Bank Nifty stocks. The name for all the banks as an index is Bank Nifty. So if Nifty 50 is moving in one direction, there are higher chances to the Bank Nifty to move in that direction. Hope you understand this. If you don't understand this, please go back and listen to this, because if you want to trade exclusively in Nifty and Bank Nifty, you should understand this concept very clearly. Now, the third one here we have to do is, fourth one. Compare the price action of Nifty and Bank Nifty. Okay? Why we need to compare the price action? Because it is moving simultaneously. If Nifty is going up, there are chances to Bank Nifty to move in the same direction. Okay? So, see here. It is opening here, right? I told you that to stay at R1. So this is the R1. And this bullish candle is an indication that this is going to be bullish today. And this is the 950 candle. So you have to check what is the 950 candle is doing. See, exactly at this point, it is taking support at the 20 EMA along with the previous day high. Okay, along with the previous day high, there are higher chances to the price to move in your direction. Why? Because Bank Nifty is also taking support at this point. Okay, if at all this is a red candle, you should not take the trade. This is a big concept, but try to understand. If you are taking your trade, you should not have any immediate obstacles in your side. For example, I wanted to enter here. Is there any obstacle till the next pivot? No, right? There is no obstacle. Likewise, if you are taking a trade here, till here there is no obstacle. So this is how you have to consider these minute factors. If you want to learn more about these minute factors and the CPR pivot point strategies, the complete system, you can watch my videos and you can subscribe my channel. Okay? Now, then take the trade. Okay? Then take the trade. Let's see the practical example in the charts. Then you can take the trade. The practical example here is this. This has happened on 16th February 2024. This is a repetitive pattern that occurs in the market. When you stay disciplined, stay patient and stay calm during the market hours, you can pick this sort of high probability trade setups. Not every day these setups will appear. There are days that when you take your entry here, it comes to your stop loss point and triggers your stop loss point, which we cannot avoid. Why? Because we cannot control the market. What we can control here is our position size. Now, this is a big concept, right? Now, I'm going to discuss this example a little bit deeper to reduce your emotional trading. Stay tuned to this video. Now, let's go to the mind map I have prepared. These are the 3 secrets to reduce emotional trading. Okay? Why? Because I'm taking this strategy Because when you trade anything, when you learn anything, if you learn it with a strategy, there is a higher chances to learn it with the help of the strategy in the market. So I took the gap up opening strategy here with the CPR pivot points. Now in this video, I will discuss 3 secrets to reduce emotional trading. Emotional trading results in giving you big losses, very high emotional stress, and you will go into the depression if you don't reduce your emotional trading. All the negative things will appear in your mind if you are not aware of how to control emotional trading. Emotional trading in the sense, you don't see the particular setup, you just take the random trades, and those random trades will result in negatives or the reds. Okay, more or less you will get some profitable trades, but if you don't follow the process or the strategy or the discipline you have to have in the markets, you will be in red, and after a long time you will feel like trading is the gambling. No, it's not gambling. It has the signs that if you follow, stay disciplined with one system, you will make money from the markets. The money that you are making will depend upon various factors. If you are investing some good amount of money, you will get good return. If you are investing small money, you will get small return. Okay, this is not like quick money or easy money. This is a highly profitable profession when you follow the rules. Now let's see 3 secrets to reduce emotional trading. Okay, what you have to do is trading plan automation. What is trading plan automation? Let's see what is it. First of all, if you want to, just a moment. Yeah. If you want to automate your trade plan to reduce emotional trading, you have to do these things. The first one is define the strategy. What is the strategy here? In this example, the strategy here is gap up opening, right? Now, you have defined your strategy. Okay, this is the gap up strategy. Now, set up your mind automation. This is not like algo trading or any software you are using. Your brain is your automation, automator, or this is your algo trading. Your brain is your algo trading. Okay, I am not very interested to trade with algos. Why? Because there are so many factors that is influencing the market. When you are not in the trade, I mean, when you are not taking your trade decisions, there is much more can happen. So I'm not very interested in algo trading. Now set up your mind automation. What exactly the mind automation here? Let's see. Decide that you will trade only this strategy. This is called mind automation. That means if you have decided that on that particular day I'm going to trade this gap up strategy, when the market opens, if it is showing the gap up and if it is staying at the R1, it is showing the bullishness at the R1 along with Nifty and Bank Nifty, then only you will take the trade. This is called mind automation. Decide that you will trade only this strategy. This strategy in the sense, let's go to the charts here. So on this day, this is the gap up, right? You will wait the price to come to your location. What is your location? The location here is the R1, right? So you are having the R1 here and there is a bullishness here. Now you will see this is the 950 candle and you will check what is the 950 candle doing in Nifty. It is showing the bullishness here. So you can take the trade in Nifty. Why only in Nifty? Answer this question. Why only in Nifty? I'm going to give 5 seconds for you and I'll ask you why you only should take trade in Nifty. 1, 2, 3, 4 and 5. Why? Why? Because the strategy says that you should stay at the R1. Okay. When you see in Bank Nifty, this is the R1. Will you enter the trade at previous day high? Am I tell you or teach you to take the trade at previous day high? No, right? So, what is the strategy? What are the rules? You should stay at the R1 and see the price action in Nifty and Bank Nifty. So, this is the reason why you should only take the trade in Nifty, not in Bank Nifty. This is why the markets are so dynamic. Most of the traders are not making money. They should not they will not cope up with the dynamic actions of the market. They want the certainty or the static things to happen to them. They want to do the same thing every single day and they want to make big sum of money. It is not like that. If you want to make big money, you have to contribute very big, right? Market is so dynamic, that means it is ever changing. Okay, this is ever changing, and this ever changing environment, you should be stay very focused and stay at your locations, take the trades there, whether it is the profit or loss. Stick to the process so that you can make money in the long run. You are doing all these things with just one lots or two lots. When you make these things perfect, then you can take 10, 20, 30 lots according to your financial freedom, right? If you're having 10 lakhs, you can take the trades, the lots according to the 10 lakhs, but you have to perfect it with one or two lots, right? When you do that, you're going to have some great confidence in your side. This is going to be your edge. Let's go here. Parameters and risk management. Okay, we are here to reduce emotional trading. In that, we are planning our trade automation here. Okay, trade automation in the sense you are going to plan everything before the market opens. These are the examples of how you can do all this automation even before the market opens. The parameters and the risk management. Let's see what it is. Okay. How you can reduce the emotions in the sense pre-planning everything. Pre-planning in the sense, see here, parameters and risk management here. Risk management in the sense, when in my view, this is my risk management I am following. Okay, this is the Nifty. When the stop loss is less than or equal to 20 points in the spot chart, I am going with 10 lots. This is predefined. Even before the market opens, I know I am going to do this. The reason why I have planned all these things, all the professional traders are like this. They plan the day prior to the opening of the market. So if the stop loss is greater than 20 points in the spot chart, I am going with 5 lots. Why? See here. The reason here is, see, this is the small candle, right? This is the small candle, and let's see what are the points I have to risk. See, it is around 21 points, right? Around 20 points. So what is my lot size here? Please tell me. What is my lot size? This is 20 points more or less. Okay. My lot size is 10 lots. Okay. See, if this candle is something like this, this candle is something like very big and the stop loss is more than 20 points, and I know this is going to be a high probability trade, then I will not miss this opportunity. Okay, I'm going to go with 5 lots. Okay, this is how a professional trader deal with day trading. And monitor and adjust to reduce emotional trading. Monitor and adjust. What does it mean? Okay. For example, I know that I'm going to take the trade here, right? Once I took the trade, I'm going to monitor the charts of Nifty and Bank Nifty. If there is a rejection or sudden movement against me, I should get out of the trade. Or if there is any such news events in the market, very big news events like earthquakes, some COVID situation, something like that, there is any wars against two countries, we should immediately exit the market. Why? Because we don't know what will happen next. You should monitor and adjust according to the situation. Now evaluate the performance. What does it mean? If it is moving small green candles or some big green candles, you have to evaluate the performance. That means if there is any resistance here, you should be very aware about there is going to be a going to be rejection, so that you should evaluate the performance whether it is taking any resistance at this level. For example, I want to take the trade at this level. Okay, at this level I want to exit the market. Now see here, these are the minute factors that you should understand. See, at this candle we have entered in Nifty, and see here, this is the candle you have to evaluate at 10-10 candle. Listen this carefully, why you have to evaluate. Why? Because see, this is the first 5-minute candle which is a rejection. Okay, and when the price comes here, this is the doji candle along with the initial balance high. This is another concept. So there are higher chances to the price to move against your direction. Okay, what is this candle? This is the 10-10 candle. So I have to be really aware. I have to evaluate that what will happen next. And this is the 10-10 candle. The course of action I will take here is I am going to exit the market even before the market reaches my target. Why? The reason here is when there is a possibility here to go against you, there are higher chances to the price in Nifty also to go against you. Okay, if you are not feeling confident about it, you can exit the trade, because this is approximately 1:2 risk reward trade. Or you are very confident that this is going to stay sideways, you can stay in the markets. Usually I play the certain according to the situation. Okay, this is how I evaluate in the live market. See, throughout the day, this is staying sideways. But sometimes what happens here is, like there is a rejection from this point, right? This point till here, there are chances to the price from here till here we are going to get, and it may trigger our stop losses. Okay, next. Now, we have completed the trade automation here to reduce emotional trading. Now, the next one here is mindfulness and meditation. You may wonder that what is this? In the day trading channel about the strategies, why I have included the mindfulness and the meditation. Why? Because this comes under the 80% of the psychology. When your psychology is not so good, if you're having the very best strategy in the world, you will not make money. Your mindfulness and meditation impacts your trading. This is 100%. Okay, how this mindfulness and meditation help you in this day trading? With meditation and mindfulness, you can stay focused and you can stay calm in the ever-changing market conditions. Okay, now let's see what is this. Okay, see here. A moment to observe his thoughts. His thoughts in the sense, your thoughts. This meditation and mindfulness will give you the gap between your decisions and your emotions. Okay? When you are emotionally taking the trades, you are not following any risk reward. You are not following any strategy. You just want to jump into the market without any prior preparation. But this mindfulness and meditation gives you room to observe your thoughts and emotions without reacting to them. Okay, This is a great power. When you're having thoughts and emotions, without reacting, you have to evaluate them. If you meditate at that point of time, after meditating, you will feel more centered and clear headed. Okay, that's why every day you have to do the meditation. If you are a day trader or aspirant day trader who wants to become a full-time trader, inculcate the habit of meditation and mindfulness. After doing it for about 21 days or 41 days, you will see the difference in your life as well as in day trading. Now, the third one here is the progressive exposure. What is progressive exposure? Nothing but position sizing and pyramiding according to the situation. Now let's go here in this chart and see uh, what is progressive exposure. For example, at this point, I think I should not uh, again repeat all those points. The objective here is we stay at R1. Once we are showing the bullishness here and it is giving you back to back green candles in your position, you can position size yourself. Position size is nothing but if you are taking 5 lots, you can add another 5 lots. Keeping in mind that if it comes against you, you are going to lose. But this is the right process. When you are pyramiding according to the situation, in the sense, the meaning here is there are no immediate obstacles here. Both are taking support at some strong supports. So you will position size. Progressive exposure is this. You will pyramid your positions to gain more profits. Okay, this is called progressive exposure. It should be done according to the situation, not every time. For example, on that day there is a positive news in the market, like there is some positive election results or something like that. There are chances, very high chances to go in your direction. So you should include everything in your trading, like events. There is a RPI monetary policy which is giving positive result for the market. What you should do, you can pyramid your, I mean, you can give progressive exposure on that day. But keep in mind that there are higher chances to the price to come and take your stop losses. You have to risk until you bear the losses. Okay, if you can't take the loss of 5,000, how could you take the loss of 10,000? This comes with the experience. When you are trading day by day, you are improving every single day, bit by bit. You will understand what I'm saying. Okay, this is how we can reduce our emotional trading in day trading. If you like this content, you have understood the concept of gap up opening, what are the rules to trade while there is a gap up opening, you can subscribe my channel and you can watch my videos so that you will get more powerful insights to take the trades in the live market. I am good at CPR pivot points. If you want to learn the concepts of CPR pivot points and the strategies to trade with CPR pivot points, I am having a course on CPR pivot points. If you are really interested to learn about these concepts, you can contact me in this way. Let me tell you where it is. Okay, now I will tell you my ID. Trading tricks 44 at the rate gmail.com. Okay, when you mail at this point, at this email, I'm going to give the course details. Thank you so much for giving your valuable time to me, and I'm eager to serve you in the form of CPR pivot points training. Thank you so much for watching my videos.